What's up, guys? William Ryan here from Optimal Advance, back with another video. And today we're going to be going over my gold shorts from this past New York session. So let's get right into it. Okay, so this framework, as you guys are familiar with, if you guys have been following along with the channel, is the ICT 2022 YouTube model. And so this was the framework for the trade that I took this morning, and we're just going to go over my thought process, my money management, my trade management, where I took my partials, and what I'm expecting for gold in the coming weeks. All right, guys, so if we were to look at Monday's price action here, Labor Day Monday, you guys can clearly see that price is consolidating. Okay, so when price is consolidating, orders are being built up above the marketplace and below the marketplace, right? And from a power of three perspective, what comes next? Okay, what comes next in ICT's power of three, right? So there goes consolidation, manipulation, right? This is the manipulation here. Okay, so when price rallies up to take out this buy side liquidity pool over here, right? They're enticing buyers on a breakout and essentially manipulating the marketplace. Okay, so they're running it up here to take stops and also to go short themselves, right? So we have the liquidity rate, right, through the form of manipulation. We have that here. Okay, what's the next thing we look for in the ICT 2022 model? Okay, we look for the market structure shift. All right, so yes, we have this swing low taken in here, right? But this price action here is in Asia. Okay, then we have London here. London creates this high here, and then New York session optimal trade entry here. But so this is the basis for the market structure shift. We have this high taken out, and then this swing low is violated. Okay, so that is our market structure shift. And if we were to be a London trader, if we were to trade the London session, which I am not, we could have taken this trade in here at this fair value gap and this bearish breaker. But since I wasn't up, right, my entry came in the way of this New York optimal trade entry, right? So we have from this swing high to this swing low, price comes up into a premium fair value gap with the order block, and then price begins to sell off. Okay, so if you guys want to check out my entries and my exits and my partials and all that good stuff, please head over to my Instagram page. It's Optimal Advance with an underscore at the end, and you guys will find all the details over there on my entries, exits, and the position in its entirety. All right, so I got in as soon as we came up under this fair value gap, right? So I had very, very little drawdown, roughly like 6 or 7 pips, which is awesome for gold, especially with the ranges it's producing right now. And so I just wanted to mention this as well, right? If we look at, right, the two other fair value gaps, which I did not enter at, right? I entered at this one, of course, but this fair value gap over here, right? What is it accompanied with? What's right beside the fair value gap? Right? We have the bearish breaker. These two down close candles before the up move, taking out this high. When we get down below this swing low, this becomes our breaker, right? So the fair value gaps here right, are accompanied by either a bearish breaker or a bearish order block. All right, and so what we want to be very, very aware of, and I'll save you guys some time and some experience here. You do not want to be taking trades, especially using ICT concepts, with just one PD array. Okay, you need to have two. If you want to have a high probability setup, you need two PD arrays. Okay, do not enter just based off one PD array. Okay, yes, if you wanted to enter at these fair value gaps, awesome. Okay, you could have, right? But you need the framework and context, right, of two PD arrays to make it a high probability trade. At least for me and in my experience, this is what works best for me. And this is where the highest probability trades typically tend to form. Okay, I can't stress this enough. You guys need two PD arrays to validate a trade. Okay, it's very, very important. Okay, so we're going to cross this off here. Right, and the last thing that we need to have, right, to qualify this setup is the clear draw on liquidity. Right, so going back to the original consolidation here, right, we have orders building up on both sides. Okay, so when they manipulate price, when IPTA manipulates price, taking out the buy side liquidity here, right, we've taken out the buy side. What is the next draw on liquidity? Okay, it's going to be the sell side. So we have a sell side liquidity pool here in the form of equal lows. And we have this low here. We have a higher low to the right of it, and then another higher low to the right of it again. So when I went short in here, I was anticipating price to expand to and through this liquidity pool, which we ended up getting. All right. Price created a swing low, right? And this is also where I took my partials. Okay, so I took 25% off of my position when price got below here. All right. I typically tend to take partials, although I do have a higher time frame draw in mind, which I'll mention a little bit later in the video. I always want to take partials. I want to pay myself for the time that I'm in the marketplace. Okay, if my money is at risk, my demo money is at risk, I want to pay myself, right? If I'm in this trade for roughly an hour and a half, I want to get paid. Okay, and in this trade here, if I didn't have necessarily a higher time frame bias in mind, or if my higher time frame bias wasn't that clear, I could have taken everything off down here, right below the equal lows, and it would have been a 3-to-1, just over a 3-to-1 setup here, right? I could have been done for the week, right? Just after the sell side gets taken out here, I could have been done for the week with my stop above here, TP right here. Could have been done, right? But because I have a higher time frame draw on liquidity in mind, right, I took my partials here, 25% off, and now I have 75% running. And as you guys can see, it's panning out pretty well. So underneath here at step 4, right, the clear draw on liquidity, I want to put underneath here higher time frame draw on liquidity. Okay, so this is very, very important. If we want to have good RR multiples on our trades, we're going to want to have a clear higher time frame draw on liquidity right? So in this instance, I'm looking for 1650 to get targeted on gold, which is the weekly equal lows, right? But I got in on the 15-minute time frame, right? So this is how you get really big RR multiple trades. So essentially, right, I'll have like a 25 pip stop, let's say. Right, I'm almost at roughly an 8-to-1 here to this low here. Right, this is going to be like, if it does go down to my objective, it'll be like a 20-to-1 trade. Right, and this is the perks of understanding order flow on the higher time frame and being able to get in on the lower time frame. Okay, this is going to help you lower your trade frequency as well. This is honestly why I do this. This is why I trade this way, is because I'll get in on the lower time frame and I'll secure like 25 to 30% of my position at like my first TP to pay myself, and then I will let the runner go towards the higher time frame objective, and I'm done for the week. I don't have to do anything else. Right? So that is the beauty of understanding the higher time frame draw on liquidity, and also understanding and being good at getting in on the lower time frames. Alright guys, so I hope you guys have learned something from this video. It was a pleasure making it for you guys. I'm going to be pretty much done for the week, and if there is another setup that I can take within any of the asset classes, I will take it and I will let you guys know, and I will produce more content for you guys. And if you guys have any recommendations for me on what you guys want me to trade, okay, like if you guys want me to trade wheat, soybeans, the crosses, crypto, stocks, whatever you guys want me to trade, drop it down in the comments, okay guys, and I will pump out some content for you guys, and I'll trade it. You name it, I trade it. I'll catch some pips out of it. So again guys, I hope you guys enjoyed this video, and I will see you in the next one. Take care.